If you've been trying to understand what is driving the current rise in biofuel spending across Europe and whether the pace of this will continue going forward, certainly in a market that continues to be shaped by higher construction cost inflation and trade tariff uncertainty, then this conversation will help connect the dots. Welcome to Navigating the Currents of Change. My name is Shaheen Chohan, and I'm the Vice President of Market Analytics at Industrial Info Resources, a global provider of energy and industrial infrastructure market intelligence for more than 40 years. In our podcast, we will be taking a closer look at some of the key themes and trends being seen as Europe continues to forge ahead with its goal of decarbonising the transportation sector. And to help me dissect some of these, I am delighted to be joined by Jean-Baptiste Mauduit, who leads our European research for alternative fuels and chemical processing. Welcome, Baptiste.
Happy to be here, Shaheen.
Now, obviously, decarbonisation of the transportation sector has been very much a focus across Europe now, I guess, for a good number of years, as it is globally. Before we talk about some of the specific spending trends in your industry, maybe you could just share with us what are some of the specific types of commodities that you and your team are researching.
Our researchers are tracking a broad range of biofuel. For example, we track at the moment over 100 sustainable aviation projects, SAF. We track as well over 300 biomethane projects worth around 8 billion. And we track as well biodiesel, ethanol, methanol for around 7 billion. But from now on, this is something that is new, we are tracking as well biodiesel, our stages to give our clients a better view on their commodities. But we as well go over it. We are closely monitoring the green hydrogen market. Green hydrogen being one of the feedstock for e-fuel. And we know that the e-fuel is one of the solutions to decarbonize the transportation.
Now, Baptiste, with many other renewable markets and sectors, policy support obviously clearly plays a big role in sort of certainly supporting capital investments moving forward, certainly at the early stages these new technologies are being deployed. What are some of the main policies in place that is driving capital spending across Europe?
So we have several policies in Europe. We have the ETS, the emission trading system, that puts penalty on companies that emit more CO2 than they are allowed to. One strong example in transportation is the Refuel EU aviation. It's part of the EU Fit for 55. And it requires the fuel supplier at EU airport to start blending a set share of sustainable aviation fuel into jet fuel from 2025, with a share increasing over time up to 2050. And this is already driving major investment in SAF production plants and feedstock supply chains.
Now, Baptiste, as you highlighted there, sustainable aviation fuel is certainly a major component of the broader transportation decarbonisation story. What are some of the current targets? But more importantly, do you actually think they are achievable?
So starting from 2025, as we saw, fuel supplier in EU airports must begin to blend some sustainable aviation fuel into their jet fuel. From 2025, so it's 2%. From 2035 will be 20%, but 6% of it must be synthetic aviation fuel. And what we mean by synthetic aviation fuel, it's green hydrogen and CO2 carbon captured. So this is the feedstock. And by 2050, it will be 70%, and 35% of it must be synthetic aviation fuel. So again, green hydrogen and CO2. So you ask me if it's realistic. The answer is, at the moment in Europe, we see a lot of green hydrogen projects as being postponed or cancelled. And even though many sustainable aviation fuel plants are in the pipeline, not many are operational. But at IIR Europe, we are closely monitoring all the green hydrogen projects. So reaching the goal by 2050 of 35% synthetic aviation fuel will require a major scale-up in investment infrastructure and political support to turn ambition into delivery.
Now, beyond sustainable aviation fuel, are there any, I guess, new emerging pockets of capital investment that you are starting to see which you think could really start to open up and provide a new kind of pipeline of spending opportunity into the future?
Yes, Shaheen. At the moment, we see a very strong capital investment in biomethane. But in Europe, we have biomethane since the early 2000s. But what actually is biomethane? Biomethane is you have organic waste, especially coming from farm. They are put into a big tank. The tank is named anaerobic digester. Then, the gas is going out, and the gas is upgraded into biomethane. And since the Ukraine war, we see an increase of units around 50%.
So, Baptiste, what makes biomethane so special?
What makes biomethane so special and valuable for me, it also produces biofertilizer and CO2, but it's a biogenic CO2. The leftover residue from the digestion is called digestate. It can be turned into biofertilizer and sent back to farmer. So we kind of close a loop. We use the residue from farm to produce biomethane, then turn into biofertilizer and send back to a farmer. As well, from it, during the process of cleaning up the gas before to be sent into the grid, we can capture the CO2. It's a high-grade CO2, and it's called biogenic CO2. And this CO2 can be used after for, food industry, or even to produce the e-fuel as one of the two feedstock. I think in IR we are tracking over 300 projects in Europe. But as well, I would like to highlight something. In IR Europe, we are trying to see trend before even it happens. For example, at the moment, I can see some project report, 2 or 3 project reports about e-methanol turned into jet fuel. So a plant that now will start to produce e-fuel, and we see some of them, instead to use the green hydrogen and CO2 to produce synthetic aviation fuel, they will produce the e-methanol, especially used in maritime transport, and then use the e-methanol as a feedstock to produce sustainable aviation fuel. Not synthetic aviation fuel, but sustainable aviation fuel. So from now on, we will start to track as well those projects.
Now, Baptiste, we obviously can't talk about decarbonisation without talking about green hydrogen, and you've already sort of highlighted a few little snippets around what you and your researchers are tracking in that, particularly in that space. Could you just give us a little bit more detail about the levels of capital spending that you are seeing currently active, but also what is the future pipeline of planned spending going forward in Europe?
Across Europe, we are currently tracking around 120 billion in capex investments related to green hydrogen, with approximately 800 projects underway or planned. The EU Fit for 55 package set ambition target by 2030, at least 42% of hydrogen used in industry must be renewable, increasing to 60% by 2035. Additionally, as we saw, by 2050, 70% of the aviation fuel must be sustainable and 35% synthetic aviation fuel. However, despite all those targets, we're seeing a wave of projects delayed or cancellation across Europe. Based on current trends, we expect a market correction in the next 12 to 18 months, after which only the most viable, well-supported projects are likely to move forward.
Now, one area of the clean hydrogen space that I think often gets neglected is blue hydrogen.
Mm-hmm.
Can you explain a little bit, before we start looking at some of the specific trends, can you explain a little bit of the difference between the green and the blue hydrogen? And do you expect to see any kind of differences in the trends and the size, the pace of spending between these two particular commodities?
So hydrogen is typically produced with what you call steam methane reformer. So it's coming from now the natural gas. It emits a lot of CO2. But the blue hydrogen, the only thing, we capture the CO2 from the process and we store it. But the green hydrogen is different. The green hydrogen is made from splitting the water molecule via electrolysis. So electrolysis are powered entirely by renewable fuel like wind or sun. So the result is zero net CO2 emission. But there is a cost at it, Shaheen. The green hydrogen production costs around 3 to 4 times more than the grey or blue hydrogen. So even if at the moment in Europe we track much more green hydrogen project, we expect the blue hydrogen to go forward much more than the green hydrogen.
So, Baptiste, does that mean that you and your researchers are starting to see more carbon capture related projects being announced and planned across Europe?
Yes, we do. Right now, we have over 200 carbon capture projects in Europe, representing around 17 billion. This reflects a clear and accelerating growth. Major oil and gas companies are under legal requirement to deliver large CO2 storage capacity by 2030, and more facilities than ever are operational or underway. While challenges like cost and regulatory delays remains, the overall momentum behind CCUS is robust and set to keep rising over the next few years.
Now, Baptiste, let's look at the other side of decarbonising the transportation sector. Europe is obviously one of those markets, a very strong market in terms of electric vehicle adoption. Will the EV market and the expected future growth of adoption, do you think that could possibly impact the viability or the feasibility of some of the biofuel projects that you are starting to see being announced?
Europe is clearly leading in electrical vehicle adoption, especially the passenger car segment. But it doesn't mean that biofuel are pushed aside. In fact, both technology are likely to coexist because they serve different parts of the transportation sector. While electric vehicles are ideal for city, commuter use, biofuel remain essential for areas that are harder to electrify, like aviation, shipping, long-haul trucking. So rather than competing, electric vehicle and biofuel are part of broader complementary strategy to decarbonize transport across all sectors.
And finally, I would like to get your thoughts on the outlook for traditional petroleum refineries. Obviously, across Europe, refineries have really struggled, certainly over as much as I think the last decade, certainly to try and compete with the newer, more complex refineries in the US and certainly the Middle East, and even to some extent in Southeast Asia. Now, as the transportation sector starts to decarbonize, and clearly there is still a lot more pressure on European refiners from these big refinery centers in US and Middle East, as I highlighted, what can the traditional refiners do to remain, relevant in a increasingly low carbon future outlook?
As you know, Shaheen, Europe traditional refinery sector is shrinking fast. Grangemouth in Scotland shut down last spring, and major players like BP are selling off facilities in places like Germany. But it's not all doom. Some refineries are finding a way to adapt by mixing in renewable feedstock like vegetable oil or use cooking oil alongside crude in existing plants. Plus, I think we are around 26 refineries in Europe who produce sustainable aviation fuel to meet the EU mandates, showing that the real momentum towards cleaner transportation fuels, even if it's a tough market.
So that brings us to the conclusion of our podcast. A very big thanks to you, Baptiste, for sharing your insights and perspectives today. Very much appreciated. Really enjoyed the discussion. And also a very big thanks to all of you who've tuned in. If any of you have any further questions about any of the points discussed today, then please do reach out to myself or to Baptiste via the contact details that you can see here. Thanks again for joining us. I hope we have helped you all better navigate some of those currents of change that we're seeing.